Welcome back, traders. This is Mike with Vant Trading with session 18 of 20 to your beginner's day trading course. Today, we're going to have all three traders, Nick, myself, and Tyler, go through their trade stations and their chart setups to kind of give you an idea how each trader kind of goes through putting their day together and how they analyze and find their plays. Congratulations if you made it this far. We've gone through a lot up to this point. We're coming into the home stretch. And again, we've really gone over a lot, and it's not going to happen overnight. So what you got to do is you got to process what you can process. Just make sure, though, you're putting together that trade plan. That's the most important thing. And you're going to see a lot of that come into focus today as we go through some of this stuff. Okay, as usual, the habit of the week is adaptability. I put up there a Bruce Lee quote: "The best fighter is not a boxer, karate, or judo man. The best fighter is someone who can adapt on any style. He kicks too good for a boxer, throws too good for a karate man, and punches too good for a judo man." And that's a pretty good quote from Bruce Lee. Adaptability, it's really important when you're talking about adaptability in trading. You need to have it. Right. And, there's some positive traits that go along with adaptability, and there's negative traits to go along with that. And I kind of go through each one. Now, to be adaptable, you have to have versatility, and that's your ability to adapt. You got to be flexible. Okay. So the negative trait to that really would be rigidity. It's my way or the highway. Right. So, you got to be flexible. You got to be versatile. You also got to have resilience, knowing how to overcome a setback. That's really important. And then, of course, you got to have attentiveness, being aware. And that's what really nothing more than being mindful, having mindfulness. We talked about meditation really is a big part of what you need to incorporate in your trading going forward. And more of the negative traits, significance. The need to be right is a negative trait to adaptability. Subjectiveness, not being thorough to know where you are wrong. Okay, so that's important, right? You got to be thorough, and you got to keep emotions really, not let emotions get in the way, because you have that. Everybody, it's one of the 6 human needs we talked about. Everybody needs significance, okay? And so everybody needs to get that outside of trading. Okay, that's where you got to get your significance, and that's the need to be right. Now, when we're talking about adaptability in trading, there's 4 areas that we're talking about. One, which is the most common, is adaptability in the marketplace. Okay, the second one is adaptability in price action. Now, you got to be careful with that, but I'll explain what I mean. Then you got to have adaptability in approach. Okay, and then adaptability in your emotions. Now, adaptability in the marketplace, the markets are constantly changing, right? Waves don't last forever in the stock market, and they are like waves coming and going. So, it's important that, you are prepared and you have your signpost set up so you know exactly when the market is changing and when it's not, right? So your trading system and strategy will not be successful all the time. And they're not set up to be successful all the time. See, they are by nature rigid, and they have a fixed set of rules. But the market, can't, fit around that. The market's in constant flux. You have rotations on an hourly, daily, weekly, monthly situation. Then you have different market structures that change. And then you have fundamental changes in the marketplace. So there's a lot going on in the market. And one of the key things as a trader, you need to be able to identify when is the market changing. The quicker you can do that, the better trader you're going to be. Now, there's also adaptability in price. Okay, you're constantly, when you're going into the trade day, and you're trading a stock, you have a thesis. And one of the most important parts of that thesis is just that it's a thesis. So you're looking for confirmation that the thesis that you came into the day with is correct. And one of the most important parts of confirming that thesis is whether or not the bulls or the bears are in charge, right? We're talking about always getting the odds in our favor. That's why we look at the opening print. That's why we look at the pre-market. That's why we go back and look at the prior day's highs and lows. That's why we go back and look at the weekly's highs and lows. And that's why we look at the market structure and such. Okay. So, you know, you got to find out who's in charge. And it's a constant battle over direction of stock. Right. And so the first thing you want to kind of know is, are you in alignment with the long-term direction of the stock, the intermediate term, and the short term? Because there is 3 different market structures for a stock that you need to look at. And when they're all in alignment, it's going to be different how you're trading. Now, experienced traders can flip on a dime, okay, as control is established, meaning if a bull, you know, let's say that you come in with a thesis that, you know, this stock really is a bullish thesis, it's going to go up. But then all of a sudden you notice that you get in the stock, you lose, right? Because it comes back below VWAP maybe, and it doesn't reclaim that opening print. Next thing you know, you notice a bearish pattern and you notice that bears are in control. Well, an experienced trader can recognize that, right? And can actually flip to the short side. And now that's not something that I recommend for a novice trader to do, because obviously you can be going back and forth and getting whipsawed up and down. But there is certain things for experienced traders, certain patterns that they're used to and they know. And there is certain theses that we go into the market day, either in market neutral, where this could either go bullish or this could either go bearish. And a lot of times we have those levels pointed out ahead of time going into the market day. Now you have to have adaptability in approach. Okay. Adaptability in approaches, you know, being a successful trader, you got to change sometimes the way you approach the markets and the way you approach different things, right? So sometimes you got to change the way you approach your trading strategy. Okay. Understanding when it's not working, when it is working, when to really go heavy and when to maybe lighten up a little bit. You got to also learn to change your approach and learning style. You know, if you guys, you know, you've been going through this course, we've gone, you know, it's 5 weeks now that we've been going through this day trading course. It's a lot of information. You have forgotten, trust me, a lot of the stuff that went on in week 1. But remember, week 1 and week 2 were the most important weeks of the whole course. So what I would recommend is you go back, repetition, mother of all skill, change your approach, maybe do something different. You already listened to the course the first time. Maybe now look at it from a different perspective. And a lot of times people don't understand they got to change their approach sometimes with the way they're learning. Okay. Sometimes you got to change the approach in the securities that you're trading. Maybe instead of going to stocks, you're going to go to options, maybe from options to stocks. Maybe you decide, you know what, Forex is for me. The key is sometimes I know some traders, very successful traders, that depending on the market conditions will go from Forex to stocks back to Forex. So it's, you know, and that's not necessarily a bad thing if you're successful with it. You want to also question and change your approach sometimes with your broker. Are you getting the best fills? Are they working and really supporting you? And really asking questions is really what's important for analyzing that stuff. You should change sometimes your approach to your schedule. Now, when I go through my schedule and my trade setup, some of you are gonna be like, man, Mike, you're just balls to the wall and you're just like every second's like mapped out. But I also realize that I can't do that on a consistent basis, you know, for like year on, year out, year on, year out. I naturally change my approach and my schedule to give myself some breaks and to give myself what's really important, balance. If we were to do another week, the next habit would really, or next trait would be balance, right? Balance is so important. So you got to be careful. You don't want to burn out. Okay. And sometimes you've got to be able to recognize when the markets are burning you out, when the stress level, I don't care how long you've been trading. Okay. I don't care how little you're trading or what your situation is. Everybody experiences a stress when they trade. You can't get rid of it. It's a natural, you're a human being, it's a natural emotion to experience. So you need to look and see, maybe I need to cut down and change my schedule a little bit to give myself a break. Sometimes you got to look at your approach to your habits and lifestyle. Okay. We're doing this for a lot of us are doing this for freedom. Go enjoy yourself, right? You don't need to trade every second of the day. You don't need to trade every opportunity that comes around. Make sure you enjoy life. Make sure you live it to the fullest, because that's really important. It's going to make you a better trader. I see so many traders, Mike, let's trade Christmas Eve. Let's, the market's open. Take a break. Okay, take a break. I don't care. Even if you knew, look, the market volume is going to be late and it's going to filter up and it's a great time to make some money. Who cares? There's always going to be another opportunity. Remember, it's not about the money. Okay. Then you need to look at your adaptability in your emotions. Okay. You need to be able to recognize your emotions and when, when they're getting in the way, right? And you need to be, able to adapt. Okay. If you constantly are making the same mistakes over and over, the key is not that you're making the same mistakes over and over, is how you're going to adapt to that. How you're going to change what you're doing to make sure that you can still have that weakness and be a good trader. Okay. Do you have this need to be right? Is significance coming and really playing an important part? Maybe you want to look outside your trading life to see where you're getting that significance from. Okay. And there's different emotions for different markets. Some emotions work better, believe it or not, for different markets. And I don't see a lot of people talk about that. And really, some emotions can be a positive for certain markets and a negative for other markets. So and the only way you know that is if you're taking notes in your emotional journal and, journaling it so you can come back to it and you're constantly looking at it. And look at, how your emotions and how they affect you. Maybe you got stuff going on in your life and you don't realize it, right? Well, and it's coming out in your trading. That's what adaptability is, okay? You got to be able to recognize and then make the changes that are important for you going forward. Okay. That's it on adaptability. Now, what I want to do is let's take a look at Mike's trading day. Okay, let's look at how what my schedule looks like. I'm going to go over what my schedule looks like, what my trade system setup looks like, how I do charts. I'm going to pull up some stocks this week that we traded, right? And at the end of last week, so the recent stocks that you can look and how we top down, how we use top down analysis to look at these stocks. And then we're going to go over some of the systems that I put in place and stuff like that. All right, preparing for the trade day. You need to organize your day. Okay, we talked about this in week 1. Okay, you need to have a blueprint for the day. And, I can't tell you how many people just wake up. They know what time they want to wake up. They just pop in their seat and they just start doing stuff and they have no organization to their day. Trading is not a good, a good thing to do. It's not a good business to be in if you're not going to be really organized. And if you're not into that, you need to be organized. You also need to be disciplined, right? We talked about that. That is the defining trait. If there's a defining trait to being a good trader, okay, it's being disciplined. Okay. And I don't care what you have and how you achieve it, you need to become disciplined. So you need to start your day off intentional with, doing things instead of being reactionary, right? For a lot of people, life is reactionary. So you're going down the river of life, right? And, you're flowing down the river and, next thing you know, there's a fork and you just let going with the way that the river takes you. And next thing, most people wake up and realize that they're in trouble when they're like 5 feet from Niagara Falls and getting ready to go over the cliff. Okay, so we don't want you to be that way, right? Start your day to be intentional, be mindful, be aware, okay? And you need to come up with a system, okay? This is underrated, but this is probably the most important thing. You need to come up with a system to manage your emotions and manage your mind and feed your mind on a daily, hourly basis, okay? So the main tools you got to have the main tools you got to have a discipline plan. I'll show you my discipline plan again, but you got to have one. I don't care what it is. You got to be intentional. How are you going to, because discipline is a habit that you have to cultivate. Okay. It's like exercising a muscle. If you don't use it every day, it's not going to grow. You can't expect to go to the gym and lift weights, once a day and expect to see those, once a day and then stop and then expect to see those muscles grow, right? You need to go to the gym on a consistent basis. You need to be applying that pressure, that tension to the muscles every day. You need to be working them out every day. Maybe taking a break once or twice a week. Okay. So it's the same thing with discipline. You basically cannot achieve discipline and achieve success without exercising the muscle of discipline every day, without being intentional and saying to yourself, I am going to come up with a plan on how I'm going to become disciplined. And it's real easy. Right? It's real easy if you want to break it down. It's not some complex thing, right? Being disciplined is basically doing what you say you're going to do beforehand, and only deviating from that according to your internal rules that you already have set up. Okay. Discipline is not about constantly being 100% full force and doing everything, the perfect way every day. Don't let perfection get in the way. That's not discipline. So, when I go through my discipline chart, I think you'll see that, right? Another tool you got to have is a daily schedule. You got to have a daily schedule. Now, two tools that we have is a life book and a vision board. Every one of our traders that come on the floor has to put one of these two things together. I'll go into what they are, but these are the tools. Okay, because I don't care how long you've been doing this, I don't care how perfect you set things up, you are going to go off the rails. You're going to have things pop up. You're going to experience life, and you don't want life to all of a sudden throw you off track. Okay, because that's what happens. And I always use the analogy of when somebody's trying to lose weight, what do? They'll eat, they'll get organized, they'll do really good, right? And they'll do good. And all of a sudden they go off course, right? They have something they know they shouldn't have had. They had a bowl of ice cream, whatever it was. And then all of a sudden it screws with their mind and they overestimate how bad it was. That's what we do, right? We make it look worse than it was. And so we feel really bad about it. And then we allow that to take us completely off course down the road. Next thing we know, we've been eating bad, sleeping in, and gaining weight. It's the same thing else in life. So you got to manage yourself. You got to have a process, some tools that's going to keep you constantly fed. You got to feed your mind. If you truly want this success, okay, if you truly want success, you have to work at it every day, and you have to work at your mind and make sure you're guarding against what's being put in there. Okay. Business owners, when I first started a business, right, I failed just like every other business owner. I started a couple of businesses and failed. Okay. It's not until you realize that until you focus on the business itself, that somebody needs to actually focus on that living entity, the business. It's not until you realize that and you actually get good at that part of the business that you actually are successful in being successful in business. It's the same thing, right? With your mind. You have to realize that it's not just always looking at stocks and charts and money management and this and that. You have to guard against your mind. You have to your mind is a business, and you have to actually work on protecting it, feeding it, nurturing it, because it's going to be, it's the control center that's really going to be the determining factor of you being successful. Okay. So it's really important. Now, when I put together, and a couple of traders on our floor use this, is a discipline chart. Okay. And it's very easy. What I do is I take 4 weeks out, and especially during the holidays. This is my discipline chart for December. Right. And, so I put down first on the left hand, my target must. So what do I have to absolutely do to be successful, so I'm not wandering off course during this crazy month of December where there's going to be office parties and people, a lot of distractions, right? Well, I pretty much put down these issues. I got wake up, I make sure I know what time I wake up, priming, gym, RPM video, breakfast, all food, reading, my reviewing trades, stock lessons. I'm constantly learning and stuff like that. So what I did was I went through and I put down everything that I want to be accountable for. Okay. And then I also, look, sometimes I will, you see this cheat here on Sunday. That means I can eat whatever I want. Okay. So discipline's not about being perfect. It's about being intentional. So I am intentionally going to, eat whatever I want on Sunday, but I have it there. I can see it. I can see how it's going to affect my plan. I do a lot of fasting, as you can see, for when I'm eating and stuff through the weeks. Right. And so, I got what time I'm going to wake up, any special things I got to worry about, like the Ravens game is tonight. So I'll probably eat some bad stuff watching the game. Maybe, got some movies. Kids want to go, watch some movies. So, I'll probably eat some bad stuff. And then, week 3, I got Christmas, and then I got New Year's, right? So I want to make sure I've already decided for the whole month when exactly I'm trading, when I'm not trading, what I'm taking off, so you can tell on my chart as far as reviewing of trades when I'm not reviewing them, right? Take the time off, enjoy your family and friends, whatever that, wherever they are, that's close to you. And then what I do is I have people that are accountable, right? We have another chart where everybody is accountable, and we're going through and check marking at the end of the day. It's one of the things that we do. What did I do right? What didn't I do right? What do I have to get better at? And I have this up all the time. It's my discipline chart. Then I have I have my daily trading schedule, right? And I can go through it real quick. 4:30, get up every morning, man. One of the first things you can do if you want to be successful is get up early, right? Because if you get up early, guess what? You get so many more hours of the day. You're gonna, you can't help but win the day. Okay, so I get up at 4:30. Then I do these breathing exercises, priming. It's an Anthony Robbins priming. You can find it if you want it. I can email it to you. I do a priming program. It's kind of visualization. It walks me through how I want to set up my day, right? But it's guided, right? And I sit there and go through my priming program. Then my daughter's a fitness trainer, so she's home now, so she's going to work me out the gym. So at 5 o'clock, I hit the gym. I'm back, showered, back in my home office at 6:30 on Zoom for a mentorship group where we do our RPM and our goals for the day. So it's where we're setting ourselves up for the day, where we're being intentional. What are we going to focus, right? And then what are we looking to accomplish? Just even, holding each other accountable, man. You got to have a good mentorship group. If you want to be a part of that, just email us at info@vanttrading.com, and you could be a part of that mentorship group. We play a motivational video, which we put on usually in the mornings up on our Facebook page, right? So we play a motivational video, gets us, so the very first thing that our mind gets when we wake up, the very first thing, it gets visualization, right? My body's nourished by getting some exercise. I get the blood flowing, and then I nourish my mind by having that motivational video. And then I got this focus life book, which I'll go in a minute, and I read the life book through front to cover, right? To make sure I go through it all over and over again. Then at 6:45, I'm ready. Twitter, I go through our news feeds, I'll get into it more. Then I get our trade ideas, and then we have our trade meeting with our fund, and then, playbook, we have a playbook we put together, we get that together. And then by 9 o'clock, I have my game plan and my chart set up. Okay. Now, 9:15, I've talked to you guys about this. As a fund, we all go through a visualization technique. At 9:15, we visualize the trading day. And then, now to be on our trading floor, we'll all log into Zoom so we can all call out the trades and just like being on a regular trading floor. Then typically I'm done by 11. I got business development. I hit in a Zoom on that. Typically I'm not eating lunch, but if I do, I'll eat around 12:30. And then, we do our afternoon show. And I want to make sure, because, the purpose of our afternoon show was really for our internal traders. It's to really communicate to our internal traders, what went on during the morning, what we're seeing going in the afternoon. But we started doing that on YouTube, and we started getting other people coming in and sitting in on that show. So it's great. So now we have other people come in. You guys come in and sit in on the show. That's perfect, right? So we want to make sure we're prepared for that. And then I have it scheduled out at 2:00. I always am trying to learn something new. So I sit down at 2:00 and I do a trading lesson myself. And then 3:00 power hour, we're back on it, back on the floor, back on trading. And then at 4:00, this is really important. You need to get up and walk around a little bit, right? Get up and then journal quickly while it's fresh in your mind. Journal your trades. So I do that as well. Then at 4:30, we get together as a group where you review the trades. And then 5:30, we'll go and do our trade research. And then I'd go run with my dogs in the evening. And then, I do meditation at night at the beaches when we're in Key West. And then, I pray and I make sure that I read for an hour, and then I go to bed, right? I'm bed by 10:00. I make sure I nourish my body. I make sure that, I nourish my mind. Okay. It's really important. Whatever it is, you don't have to follow that. You need to follow whatever is the daily schedule that you need to follow. So for me, again, walking through it, start the trade day. I really start my trade day for preparation at 6:30. Okay. I don't know how you can do it any other way. I started at 6:30, and then I wind up working my way through any major news events for the day. Okay, see, we have what's called a playbook that we put together. I'm going to go over it in the last day because you guys are going to have access to that. And really, the playbook is where, our traders, they don't need to go read the news. They don't need to go to blogs. They don't need to do all this stuff and constantly look at shows and be biased and stuff like that. We do that for them, and then we put a value on it, how it could affect the trade day, and that all goes into our playbook. Okay, so that's why I spend 45 minutes through the news. You shouldn't be spending 45 minutes going through the news because it's not worth it, okay? Then I spent about 30 minutes because the night before I've gone through and done my trade ideas, right? And so I already have them set up. But now I got to look in the morning and see, okay, how are those stocks holding up? Number one, that I picked the night before. Number two, where is there any new catalyst-driven events, any news ideas that I saw that the stocks could be a catalyst and really have a good day trading? So that's where I'm finding those as well. Then what'll happen is then at 8:00, we all hit our morning market analysis meeting that we have as a fund. We spent about 30 minutes going through, all the traders bring different ideas and research to the meeting, and we decide on the watch list based off a group decision. Now, it doesn't mean that's the final stocks that we're going to trade. It's, it's at 8:00, and that's where we are right at this point. Then we finish off the playbook. Market moving events are in there, other assets and global markets, what they've done. I'm putting in the important SPY levels to trade off the day. We have playbook of plays for each of our traders on there, and it identifies important levels. And so it's our playbook to really go and hit the day. Okay, it's what we're going after. It's everything we need to know so that we don't have to leave our station, look at different things, and be biased. Okay, and then we're completing our chart setups and our trade station setups. So I'm making sure that my chart levels are all mapped out how I like to see. I'm a visual guy. I like to have all my chart levels mapped out a certain way. Whatever your structure is, you need to have that. My playlist I insert into my setup at the trade station. I'm making sure my order entry screens are all set up, and I'm making sure, most important, that I know all my position sizing and levels. They're clearly identifiable should I choose to trade that stock. I'm not trying to figure that stuff out when the bell goes off. If I'm trading a stock, I have that all figured out prior. It's all part of my pre-market prep. Now, I talked about a life book. Okay, every one of our traders puts together a life book. So in the morning, at 6:30, I'm always going through my life book. And a life book, you should have this, man. And it's all part now because you did a lot of this for the trade stuff, right? You got to know, man. You got to to be fulfilled, man, you got to know who you are. And to be a good trader, you got to know who you are. So it's a book. It's, it's really thick and something that we've put together and we've worked on. It's a living document. It has my vision statement. So I'm reading my vision statement every day. It has my mission statement, my identity, values, power, virtues I really want to incorporate in my day, standards, beliefs, daily commitments. Okay. It's got my business focus, my life goals, my 6-month, 1 year, 2, 5-year goals. And then at the end, it has about 40 different pictures that really trigger my brain, that gets me in a good state of mind. Because remember, you want, good things happen when you're in a positive state. So if I really am down, I'll go through and look at those pictures and instantaneously it'll get me in a good state. Okay. So I read that and I'm constantly working on that every week. Now, everybody has a vision board. Okay. This is my vision board. Kind of opened it up to you guys, right? This is my vision board. Very simple, but it's things that's important to me, right? I love Aspen, Colorado. And so I got a picture of Aspen, Colorado. I love Christmas. I love New York, right? I love, some of the different things that are, more object things, but I also love, eating healthy fuel, having gratitude, okay? Passion, being physically fit, love, and so these are things that when I open it up and I have it rated, every trader has it at their trading desk, so if you're having a bad day or you have a bad trade, you can flip right over to this and it'll really help you out. So, again, whatever the tools are for you, make sure you have some good tools to really keep you on course. It's so important, man. You got to guard your mind as best that you can. Okay. Now let's look and kind of close on a little bit of finding, top-down analysis. How do we find our stocks? What are we looking at? And some of this repetition, but repetition is the mother of all skill. Finding the right stock. First thing I'm looking at is, does the stock have a catalyst? Okay. Is there fire? Because where there's smoke, there's fire, right? And so, is there a catalyst? Is it, and what do I look for to find my catalyst? I'll look on Twitter. Twitter's great to look for if you have the right people that you're in with. I look at news services that we've assigned to. Bloomberg and stuff like that. And then I have my network of other traders that I've developed over 20 years. And I'll go to my network. Hey, are there any stocks? And we'll feed ideas back and forth, right? Are there any stocks in play? Okay. And so again, remember, it's not that we're looking for ideas, right? Because we're going to make those ideas, if I get it from another trader, our own, right? We make our own analysis. And that's really important, but it helps. Don't be afraid to look at different types of places to find good catalysts. What's in play? And then, of course, we also have we have trade ideas that we'll go through. We'll go through our scanning software and see if we can find something that way. Then the next thing I'm looking for is volume. This, guys. I'm a big volume guy. It's got to have gasoline, man. I got to know people are at the party. I got to know it, right? And so the biggest thing I have coded in my charts is RVOL. It's relative volume. And we're looking for RVOL of at least 2.5. I love 3. Okay. And so I'm looking for an RVOL. That means that if it's 3, there's 3 times more people trading that stock than on average for that time period. Okay. So if it has a catalyst, it has RVOL, there's people there, I'm good to go. And then the final piece of the puzzle for me is alignment. I want to make sure the short-term, intermediate, and long-term are all in alignment, because this is going to tell me how I'm going to trade the stock. How big I'm going to trade it, how much risk I'm going to take on. All is based on the alignment of looking at the charts. So when I'm looking at charts, my long-term charts I'm looking at is the monthly, weekly, and the daily. Spending more time on the daily, the weekly and the monthly, more of confirmation. Now, I will use the prior week's high and low, okay? That can be good inflection points when you're trading a stock. So we'll make a note of those, okay? On the intermediate, I'm looking at the hour and the 15-minute, okay? And on the short term, I'm looking at the 1, 2, or 5-minute charts. Okay. Now on the daily charts, what I have on my daily charts, I have my 9 EMA, my 21 EMA, 50 and 200. I also have a Bollinger Band chart that I automatically have structured that I can look at real quick to see if I can find some trends that I'm looking for on some stocks. Okay. So that's what I'm looking at. On the short-term charts, it's VWAP and the 22 EMA. That's it. Now, if it's more of a, we're not in alignment, it's more of a short term, maybe I'm looking for a scalp, I'll probably use more of the 8 EMA. So it kind of depends what type of market we're in between the 22 and the 8. Okay, so what I'm trying to determine when I'm talking about this alignment and stuff like that is the stock in an active sequence, right? Well, for me, for a stock to be in an active sequence, which means I am willing to trade this stock maybe more on a swing / day trade / scale in on trades, it needs to be on the daily chart. The stock needs to be above the 9 and the 21 EMA. Okay, I don't care about the others. It's the 9 and 21 that I'm really looking at. And I don't mean I don't care. It's just that they're the two that I'm really focused in on. Okay, I also need to know that the overall market is in uptrend, obviously, if we're going long. And I need to know that all 3 levels are in alignment. And then what I'll do is that'll give me the opportunity to, I'll trade this differently. I'll scale in, scale out of some trades, okay? And I'll trade it that way. Okay. Now, if it's not in alignment, then I'll probably do either 1 or 2, which the next 2, either I'll short-term scalp it or I won't trade. Okay. So short-term scalp is when, typically the stock is between or below the 9 and the 21. Okay. SPY may be in a range and you don't have that alignment. So what I'm looking for is quick action, okay, because I really don't have that extra confirmation. Remember, we're looking for trades. Most traders trade way too much and they don't know or haven't figured out how to identify good setups, okay, ones that are going to put the odds in your favor. Okay, you got to start writing some of these rules and come up with some of your own rules. And remember, no trade is a trade option, right? It is a position. Being on the sidelines is a position. Cash is a position. So, and if I have no edge or the volume is low or I'm not feeling it, sometimes I come to the trading floor and I'm not feeling it. I'm distracted. Whatever it is, I won't trade. Okay, you got to be in control of yourself, guys. You got to know, when, you're in control and when you're not in control. Okay, now as far as the chart setup, how I set my charts up, I'm a visual person. And I have 6 screens. I'm trying to follow a lot of stocks and I'm older. So I need to be able to act quick, in a lot of these setups and stuff like that. And I'm typically the guy that likes to look at more stocks. Now, as a new trader, most new traders look at way too many stocks. Okay, way too many. You want to start off focusing on 1 or 2 stocks and then increase that as you get better. I don't care that you're missing other setups. I don't care you're missing other opportunities. I don't care that you don't trade because you're picking the wrong stocks. Okay, you look, in the beginning, you gotta work your way up to looking at more stocks, and you gotta have a system. Okay, and by the way, I didn't mention it on my daily chart, right? I mean, my daily schedule, but the system I use for discipline and stuff like that is I use my Google Alerts. So everything I have on my daily chart is set up in my Google Calendar. I can click that chart on or click it off, actually, and then I have alerts that go off on my phone all the time, alerting me to what I should be doing. And that helps. Same thing with your stocks, right? Make sure you have a good alert system. Set your volume, your levels, and set it prior to it getting to the level that triggers you a trade, right? To give you some time. Set that alert a little bit away from your target level to where that stock now becomes interesting to you, and it could be part of your thesis for the day. I'm constantly cycling through stocks that way. Okay, so for me, whatever you do, make sure you have a system that works for you. For me, this is the system that works for me. Okay, and Tyler and Nick are going to show the system that works for them. They don't tend to get as much detail as I do. Now, on the daily charts, for important support and resistance levels, I'm using a gold line. Okay. If it's a really Mac Daddy level that's really important, then I even increase the thickness of that line because that tells me, boom, that is a major, major level. But just the fact it's a gold line on my chart tells me it's an important support or resistance level on the daily. Okay. Now, when I look at my hourly charts, I'll draw those lines in red. Okay. So the support and resistance lines on my hourly charts are red. Now, I also do a lot of my market structure off of the hourly charts when I'm doing my composite as well. And what I'll do is any high or low volume nodes, I'll have a rectangle faded around those nodes. So that way I know there's a low volume node. And as you know, through the market structure class we went through, most markets are trying to go from one high volume node to the next, right? And so those low volume nodes, they go through rather quickly typically. Now, the point of control, I'll usually put a purple dotted line. I'll fade it out a little bit so I don't have too much on my charts, but I can know it's there. Now, when I really drill down to my 1 and 5 minute charts, I have the prior day's highs and lows in blue. Okay. I have the pre-market high and low in white. And I have the pre-market point of control, purple line dotted. And then the prior day's close, I have a script that automatically puts it on there, a green dotted line. And I have, when the market opens, I have a script that automatically puts it on my chart, the opening print, and it's an orange dotted line, okay? And again, when I have setups going into the trade day, I usually will put a little rectangle around the area of my setup and around the area of my stop loss. Okay, so I know now when I have all my screens and all my charts up there, I know exactly what I can visually look at a chart, know where the price is, and know whether or not I'm interested in that stock. And I don't have to look at levels. I don't have to look at numbers. I don't have to look at anything. I can scan a lot of charts that way because I have a good system that way. Okay, and it works really well. But, you know, if you're a new trader, be careful. Most new traders put too much on their chart because don't forget, price action is the most important visual item on a chart. Okay. Matter of fact, if it was a choice between just having price action and having stuff on my charts, I'd rather have just price action. Okay. Because price action is that important. Price volume. And again, I have RVOL that shows me exactly what's going on. I also have overbought, oversold built into my volume bars. And I also have, you know, a VWAP slope indicator built into some of my charts as well. And I'll explain those as you'll see. Now let's go through some actual stocks, some actual top-down analysis. I'm going to go through these quick because I didn't want this to be, you know, another 3-hour class. And, you know, but I wanted to get some of this stuff out to you because I'm really passionate about it. All right, this is a stock, Palantir. Okay, PLTR. We traded this the other day and it offered a really nice setup. This is the daily chart. Now, it was a recent IPO, so you're not going to see a weekly or a monthly chart on this. But if you look here, this is why I like this setup. Okay. First off, you have you have all the EMAs really pointing up. And you found over the last 2 trading days, you found nice support at the 9 EMA. I really like when you find nice support there. Traders are recognizing it. And you also see an important level that I've mapped out on the daily according to a volume node. And it's really, you know, it's hanging out. It closed that there just above it and closed just below it. So really good price action for me. And what I like about it is my risk to reward, you know, my risk is not going to be too far away. Okay, it's either going to go or it's not. Now, this is the hourly chart. Okay, and you can kind of see on the hourly chart, you can kind of see uptrend, up. You see those purple or pink bars. They're my overbought indicators. Okay, so it got really overbought, went to a high, and then kind of pulled back. And the blue is an oversold indicator, level 1, and purple is oversold level 2. So you see it got a little oversold here and then worked itself back. And came up nicely. And so we're sitting at this level, really feeling that PLTR is going to take off. Well, let's look and see what happened, how we traded this day. Well, if you look here, let's go through. You can see these red lines. These are important levels on the hourly. You can see this white line is a pre-market high. You see this blue line is yesterday's high, and you see yesterday's close. You see that level, so it was gapping above that level in the pre-market, and then you can see the opening print. So this is a chart you need to burn into your brain, because if you use these indicators properly, this is a beautiful trade. Beautiful. So, didn't we, again, remember, first half an hour is price discovery, right? So be careful if you're getting in. So, we didn't get in off the opening bars, but, about 5 minutes in, it came back, tested support of VWAP, and then bounced off. Right there is where we got in. I'm an anticipatory trader. Okay. I got in, didn't wait for a break of a high or anything like that. I got in, bought, and, when it came up and broke, it flagged at this prior day's high, we actually added more into our position. So now we're in at a nice little cost average here, low cost average on this stock. And as you can see, everything was in alignment for me. So I'm really comfortable with this stock. And so I play it a little bit differently. And so this little pierce here of VWAP, not concerned about it at all. Okay. Not concerned about this at all, because it's not even down to my break-even price. Okay, so why would I have a stop right away? And it's not even down my break-even price. So many people, well, Mike is breaking VWAP. Okay, I get that. Okay, but you got to know the context of the trade, right? And also the 22 is above. Now, if you look at this stock then pierces, goes right through, and it follows the 22 nicely all the way up. Nice little trade here, up to the T, this hourly level, this volume node that I have, pulled back. So we took off some of our position in here, and then we took off, I believe, some of our position up in here. Really nice trade, really, nice. And if you look at the daily chart afterwards, you can kind of see right here is the day that we had. It opened at the low, closed at the high. That tells you that's a really, really nice trade. And if you look at the volume, again, this little pullback, light volume, and we had a nice volume day on that. Now today, which is today, that, the date, I forget what the date is, I always forget that stuff. But anyhow, this is today's date of Palantir, and, it had a little bit of a resting day, but still nothing really to worry about. And this was a really good setup. The next setup I want to go over is Tesla. Okay. Now Tesla's more of an established stock. This was Friday. Actually, last Friday, and December 4th, I believe. Don't, if I'm off a day, don't, get upset. But, it's definitely Friday, last Friday. So if you look here, this is the monthly chart. So if you look at Tesla's monthly chart, man, don't you wish you would have looked at the monthly chart as Tesla was doing this, right in here. This is why it's good sometimes to scan back and look at the longer term charts. And then here's the weekly chart. Okay. And the weekly chart, look, coming in at a nice little breakout here on the weekly above 500 and off, kind of, made 600. So you got a nice little bar in here. And yeah, we do have a little bit of a doji up top, but, nothing really to worry about, especially given the fact that Tesla has a nice catalyst going into the S&P 500. You got to keep that catalyst, that's, you can't get, a better catalyst, and this nice little run up was a nice little stock split catalyst. So, you got to have those themes, man. Got to have those catalysts. So, this is the daily chart. Now, we talked about this, in our daily trade show. So this is the daily chart. You can see this consolidation in here. Then it kind of broke out on the S&P 500 news, right? And it took 3 days to get through this 500 level, and so, if you really look in here, I want you to look at the daily too. And we're going to kind of try to zoom in here. Oh, sorry. Yeah, let's zoom in here. And if you look at the 600 level, boom, came up, pulled back, came up, this actually opened above it, gapped up above it, pulled back, went up to it, pulled back, gapped down, found support at the 9. Boy, don't you wish you were buying here in Tesla? And then next day gapped up, pulled back, and then Friday, not only did it test it, it closed near it, right near it. And, and all full disclosure, people that follow the show know I did not take this trade. I'm still beating myself up for it. You don't get a better setup here. So, the play would have been buy this stock at the close, It was Friday, you had a weekend, and I'm a little leery on those type of trades, but it was definitely the right play to do, especially looking at this chart. So this chart right here, full one, I love this type of chart. It took 3 days to get through this 500. Yeah, this is a quick, ascent up to 600, but still nice play. And if you look at the volume nodes, the high volume nodes that you see in Tesla, really setting up nicely in here, and really this level in here, the 600 level, provide nice volume analysis on it. Nice volume analysis on this. By the way, look how quickly it gets through these low volume nodes. It gets through pretty quickly. They're not spending all this time, in that level on the hourly chart. So here, this is how the stock traded on Monday, so even if you didn't buy and you still waited till Monday to buy into it, you still had a nice ignition drive off. You broke the pre-market high. The opening print, I didn't have it on this chart because I used ThinkBack to actually pull this chart up, so I apologize about that. Opening print was like right here. You blew through the highs, you blew through the 600 level right here, and you had a stock that was gapping up. And look at Tesla, how it followed this 22 nicely all the way up to the 630 level, another important level, as you can see, boom, 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 right? And then bam, all the way up to 640, 250. I'm telling you, what a nice trade for Tesla. And I don't think the trade's over. So to show you how it finished that day with that nice, beautiful setup, look at this. Nice level, man. That's nice. That's the type of trade that is getting set up. That's how you need to notice these. And then you see what happened on Tuesday for Tesla. It went up to 650. Really nice close on Tesla. I mean, this thing could go to 1,000. Again, don't look at fundamentals. Who cares? Throw that out the window. This is a storied stock. And then, let's look at the last one. I think it's the last one, Netflix. Here's one that failed. Okay, I wanted to show you one that I consider a good setup, but was a failure as a trader. So here's the monthly chart. Okay, Netflix, kind of like that monthly, closing up above there. Here's the weekly. Again, I love the weekly, closing up above there. And then here's the daily chart. Look, we had this congestion, and I've been talking about Netflix, and when it kind of gets, it was closing above here, and I guess I could have used this bar as my cue, and now looking at this trade. But typically when Netflix breaks out, look where it goes. Okay, look where it goes. And that's what I'm looking for in an active sequence out of Netflix. So, and it had some nice high volume nodes that it spent in here, and it was creating its own high volume node. So I liked the hourly chart. And if we kind of look, this is the setup. Here's the opening print. Here's the pre-market high. Here's the prior day's close, pre-market low, and that important level we've been talking about on the daily. So everything, if we zoom in here, was to the go for me. Okay, but the problem is that we didn't get, they drove it at the open, and then they brought it back down through VWAP. They closed it below the opening print. That was your signal. Not going to work today, guys. Okay, you have a down sloping now VWAP. The 22's below. So this trade did not trigger, was not a setup. It didn't work. So, and you can see it would have been a nice short here. And remember, I talked about adaptability. This here, this would have been, even with this little consolidation, red to green, green to red, nice little short here, guys. If you would have been a nice experienced trader, seeing this steep slope would have took a nice little short down to here. And that's the way you get adapted, right? So you're looking for, obviously, for a scalp. You're not going to go in big size because you're going against the alignment. But it was a nice little rejection. Nice little rejection. So that's a trade that didn't work. And here you can see it. And it did close above this level, by the way, came back in the afternoon. So Netflix is going to be on my list for tomorrow because I think it could be a nice little positive setup. Still, even though it's positive action for me, it's still, I'm still not, it wasn't a good day trader for me, but it is still setting up for tomorrow. And it still hasn't really violated. Still got these higher lows, still above the moving averages. Okay, so hopefully they helped you guys. You know, real quick, I'm going to close on my trade station setup. I get so many questions. Mike, what's your trade station look like? Well, here it is. This is my home trade station. We have a little forward station trade desk that we have set up. I got 6 screens. I got my laptop over here. You see these 2 journals here? This is my emotional and my trade journal. So I have them right there. Not much else that I really need. You can kind of see how everything's set up. I use this Logitech keyboard, and I love this keyboard. Okay, what I love about it is the fact that I can pre-program any color I want into these, and it's got these extra mode keys. It's got mode 1, mode 2, mode 3, and then you got these extra keys that really do nothing but are my hotkeys. And so I can trigger this to where if I hit this, I'm buying 1,000 shares immediately. If I hit this, I'm buying 500 shares immediately. If I go to M2 and hit this, I'm shorting 1,000. I'm shorting 500. And here, these 3, I'm covering a quarter of my position. I'm covering half of my position. I'm covering full of my position. And this escape is kill all open orders. And then you can kind of see this is 100, this is 100, 200, 300, 400, 500, all the way up to 1,000 shares on the long side of any stock that I want to get. All I got to do is hit that key. I get in, and then I got some hotkeys structured right in here. You can see the red and the green, and you can see I got a hotkey structured on my Alt symbol. This works really well. It's a great keyboard. It's a mechanical keyboard, so it's hard. It's not hard to hit the keys, but you know if you're hitting it, right? So you don't want to automatically just get yourself into position. So I recommend if you're a new trader setting up hotkeys that you have a 2-step process, meaning you hit shift and a key. Don't just have a key set up where you hit that key, it automatically gets you in, because you'll be doing that all day long, won't even realize it. So I definitely wouldn't recommend that. So this is what my screen looks like. We use Lightspeed. I like to use Thinkorswim for my charts. And, you know, if you look here, you can kind of see I have level 2 opened up. I have my order entry screen here. I have time in sales. I have my orders that I'm taking. I'll put right in there. And then, you know, I have my 1 minute and my 5-minute charts. On my 5-minute charts, you can see I have a VWAP slope indicator here. I have an RVOL for the day and an RVOL for that actual candle, which is important for me. I have oversold and overbought. You know, we'll go through my bars. You can see oversold 1. So, you know, you can see this is overbought level 2 here. You know, so it's nice. And that's actually Moderna. It doesn't match up. I was trying to change some things around. But anyhow, you can kind of see I have my 1 minute, 5 minute, and I have my volume bars. I have everything at my fingertips. I have my hotkeys, which I'm usually trading. We're going to try to go into some order flow. I think tomorrow, not exactly sure, because I don't know if we have a good enough recording to actually get into it, but we'll let you know tomorrow as we get into that. Then the screen to my right, and it got cut off, sorry about that, but this is my SPY setup, right? I have my SPY call options all set up down through here. I have my QQQ options. This is my 5-minute, this is my hourly SPY, and this is my 1-minute SPY. Okay, and then I got my generals COVID trash. I'm looking for rotation here. And then if you filter over above that screen to the top right, I have my market internals, right? I got my market generals. I got my QQQ. I got Apple. I got my sentiment leader, which is Tesla. So I got them all right here. And if you looked at the afternoon show that we had today, everybody was able to see I highlighted a trade that we did based off of relationships and this is how I see these guys. So I saw the Qs were breaking the opening print way before Apple was. Right. And so that gave me a trigger, and I took Apple for a low risk trade. It was a really nice trade just because I had my system set up, and I knew you can see that we are getting better here in the advanced decline. You can see where we're going with the trend. You know, it really is not that complicated. Now, and then the last screen I'll show you is the middle screen. It's where I got a bunch of different stocks that I throw up there. And then I have on another screen a little watch list that I can click to a stock and it changes this chart. It's linked. So it changes this chart instantaneously, and it works really well. So that way I can, if a stock pops up on my scanner, I can pop it in, look at it, and off I go. So I hope this helped you guys. I really do. I wanted to give you really in-depth analysis. What I'm going to do now is I'm going to hand it over to Tyler. He's going to go into what he looks at, his station, stuff like that. And then Nick's going to finish it up. And Nick's, look, Nick, Tyler, he's really good at Forex. He traded stocks as well. He's our Forex. He's the head of our Forex desk. So, but, he uses the same types of setups, same types of support and resistance. So it definitely will help you. And then Nick, he has a little bit different style, right? And so let's look and see what his style is. And he's head of our equities desk. I mean, he's a really good trader. So these guys will be able to give you really good feedback and good examples of other types of trading styles, not just my OCD crazy person. So with that, I'm going to hand it off to Tyler, and off we'll go.
Thanks, Mike. Tyler here. So basically what I'm going to be showing you is my routine I have throughout the day. First, how I have my morning routine, how I get prepared for the trading day, what that involves. Then I will be going into my top-down analysis, how I read the charts before I even start trading. Then before I even start trading, I'll take a look at my news sources, see what kind of headlines are out there for the day. Then I will wrap it up with showing you my day trading setup and how I trade, what my chart, what my screen looks like, and then I will wrap it up with my trading journal and how I journal my trades. All right. So without further ado, let's move on into what my morning routine looks like. So when I wake up, so I first want to note that I usually start trading around 6 a.m. So I'll wake up around 4 a.m., plenty of time before I even look at the charts to get myself prepared for the day. So what I'll first do is I will do what it's called gratitude journaling. And basically what you do is you get a journal, you sit down for 5-10 minutes, and you write down on a piece of paper what you're grateful for, and stuff like that. Because it helps me with my greed and emotions in the market. Because if I realize, I have a great family, I have a roof over my head, you start realizing all the great things you have, it'll help combat greed and your emotions in the market today. Then after that, I will start stretching, get my blood flowing, so I can wake up before I start trading. Then I'll obviously shower, get myself prepared, because I do believe that if I'm showered, dressed up, ready to go, then I'm more likely to perform better than if I roll out of bed, don't shower, I'm tired and grumpy, I go on my computer. You got to get prepared for the day. Then after I shower, I'll have myself a cup of coffee. It gives me that little extra boost of energy for the day, so I'm pumped up, ready to hit the markets. Then I will go into my trade prep, right? I'll look at all the headlines that came out, all the breaking news, look at my news filters. Then I will go into my top-down analysis, look at my levels, and then right before I actually start trading, I'll do some meditation, a quick little 5-minute meditation, get me in my peak state of mind, get me ready for the day, bring me here, center, where I'm at now, bring my mind focused. We are big believers in meditation right before you start the day. I'll do a little bit of visualization, and then I will get into trading. All right. So now that you have my morning routine and what my morning looks like heading into the day, now let's give you a little taste of my top-down analysis and how I look at charts. So I get on the charts, and I know people are going to look down on this. This is, I don't look at the monthly or the weekly charts. I don't care what they look like. I'm a day trader. I'm in and out within like 15 minutes. So I don't look at those. I start on the daily chart and I look at the day and I'm like, okay, is there any significant levels of rejection, support or resistance that we're at right now in this moment? Because I am trading for the day, I'm not swing trading. Are we near any significant levels on the daily? Because they probably will be rejected and held strong in intraday as well. So I'll first start on the daily, and in a second, guys, I'll actually go live and show you what I'm looking at. Once I look at the daily, see if there's any rejection levels or anything that's going to gravitate towards any liquidity levels. Then I'll head to the 4-hour, and the 4-hour will be my directional bias time frame. If the 4 hours looking bullish, it's moving bullish, then I will most likely look for buys during the day, and vice versa. If it's looking short and it's moving down, I'll most likely look for sells. And then what I'll do is then head to my 1 hour. 1 hour usually is moving the same as the 4 hour. If it's bullish, it'll be 1 hour will usually be bullish as well. 4 hour, 1 hour. It's the same. It's like time frame correlation. Every 4 1 hour bars is a 4 hour bar. So typically you'll see the same movement in the 1 hour. So you'll have the same directional bias. But what I'm really looking at in the 1 hour is any significant levels or areas of support and resistance zones, because the 1 hour is the stronger time frame I look at for my levels, because then what I'll do is I'll trade on the 30 and the 15 minute. But if I have my levels off of the 1 hour, which is day trading, but it's going to be significant levels, that means that what I'm trading off of should have a higher probability of respecting it. So look at important support and resistance zones, but keep in mind, I'm not charting my entire chart. I'm looking at current price action only. I'm not looking at moves that it most likely won't even touch today. So I'm looking to 1 hour. Then I go to 30 minute, and that's where I will hone in my 1 hour levels. If there's anything I need to tweak on the levels, but that's where I'll have my stop loss and take profits. And then the 15 minute is where I'll actually execute with closed volume or momentum with it. But that's where my executions and my entries are based off of. So now let's actually get into, I'm going to share with you now my charts and how I do my top-down analysis live with you guys. Cool. So here's my chart. And this is GBP, JPY. This is the pair I always trade. So I want to go into it. And keep in mind that my top-down analysis on my Forex pair can be completely applied the same exact way in stocks. So make sure you pay attention to how I do it, because Mike, Nick, and I all have similar but different ways of doing top-down analysis. So maybe you'll find something in mine that you'll like a little better, and vice versa. Maybe you'll find something there you like better. This does apply to stocks, so make sure you pay attention. And I'm actually going to give you a little bit of a trading view analysis, because this is my charting platform I use. I know they use Thinkorswim, but this is trading view, so maybe you'll like this even better as well. So let's dive on into it. So here we are on the daily chart. And one thing I'm looking at right now is what we're currently doing right now in today and yesterday, right? So I noticed, the first thing I notice is that I have these long rejection wicks, these long wicks where it closed up here. That means that the sellers tried to push it down, but they couldn't hold it down, and they bought it, the buyers bought it right back up. So that's one thing that tells me, okay, we might have some rejection on the downside. We might not want to look for sells. And if you take a look at those rejection wicks and you look a little left, one thing you do notice is this level right here. And I'll tell you why that's so significant, right? You have this level of support, this level of support, this resistance, this support and resistance right here. That's where all these rejection wicks were. So that's going to be a significant level of support to look at going into today, because obviously, ignoring this current candlestick right here, because, that's what I was doing today. If I was looking at just today, actually, and I can show you what just today was. Let me replay this here. Boom. So this is what I was looking at going into today. And I noticed that we have this really large rejection wick at this level of support. So what now what I'm looking at is, okay, I'm not going to give my directional bias yet, because it might come down, retest the zone one more time before it goes. But it is important to know that this level here has been rejected and respected a lot. So that's one thing to note. And another thing to look at, current price action again, is this level right here of rejection and exhaustion, where the buyers couldn't hold it above, the sellers continue to break it down. So that's going to be a significant level of that's going to be supported as well. If you drag that left, you'll notice that not only is it supported right here, but it's also right over here in this area as well. So that's going to be a significant level to look at. And now that I have my strong levels supporting the daily, because these levels are going to be highly respected levels in the daily, let's hop on down the 4 hour. Now, let me scoot over a little bit okay, cool. So this is yesterday in the 4 hour. And now let me put it to around 6 a.m. This is where I'm looking at the charts. So if I notice, now I'm going to look at my daily levels to make sure I still like where they're sitting. Yeah, they're looking good still, because if you scroll out in the 4 hour, respected over here nicely, respected right in here. Moving over, maybe I'll move it up slightly just to cover some wicks a little more. But so this is a good level. And keep in mind that with these levels, I'm a big believer in quarter point theory. And it's a psychological theory for traders, to where I want my levels to be near quarter points, right? 250, 500, whole number, 750. And if you notice right in here, inside that level happens to be that 250 quarter point, which is highly respected, as you can see. So I'm looking at, okay, if we are playing shorts, this is as far as I want to take it, because it's most likely, there's a high probability that it will respect this level. Now, another thing I'm looking at is, if I'm looking for buys, where are we? Well, we have this level right here. And let me show you why I drew that level. We have this respected right here, rejected, rejected all in here, exhaustion in here, it's respecting it here. So that's a good 50% level of this consolidation, because if you draw out your Fibonacci's, that level right there is more or less that 50% line of the consolidation, which is usually a nice rejection area. So that's one thing I'm looking at, where if I'm looking for buys, I'll most likely want to wait until it can either close above here, or if it doesn't, then I'll look for some kind of impulse entry. But at this point on the 4 hour, right? So this is where I'm looking at, and so seeing all this bullish action, and seeing all these rejection wicks on the downside, I'm thinking, okay, we might have a better chance of taking buys, because you have these ascending lows here, and it's wedging right into this 50% level. So I'm looking, okay, maybe we'll want to take some buys here. So that's what I look at on the 4 hour, is if we're most likely, we're rejecting this downside, and it's all bullish candlesticks, I think that, I might want to be, I might have a higher chance, a higher probability of success if I take buys. So now this is where I'll go down to the 1 hour to look exactly, see exactly where we're at. Now let me get back for you to show you 6 o'clock. So this is where I'm looking at on the charts, right? And I noticed that, okay, this was the 4 hour level, and these two are the daily levels. And if you want to color code them, you can. I just usually know what I'm looking at. And usually, like I mentioned, this level I'm going to want to put as a quarter point. So 250 is that level I want to put it to. So I'll drop this up, and that's where I'll look for it to respect. So looking on longs, if I'm looking right here in this price action, I'm going to draw, obviously it's a level of support right here, and there's an obvious level of resistance right in here, right? It's kind of just bouncing along in here. And if you take a look, you want to make sure that if you're taking longs, do you have enough range for it to move? And in this case, usually want to look for a 1 to 2 risk reward. And if I long it here, my stop would be probably about halfway, 15 pips. My take profit would be right here at this zone. That's about 25, almost about 15. So it's about 1 to 1. I don't really like longs here. So honestly, if I were to take longs, I probably would wait until it came up and closed above this area on the 1 hour, because that means we broke above, came back, consolidated, broke above, and we should then continue up. That's what I look at if I was taking buys. So I wasn't prepared to take buys where it's sitting. And if you go to the 4 hour to see where we're sitting, it's kind of so this is one of those rare scenarios to where it has a higher high and a lower low. So it's really kind of, you got to base it off of then the hour and 30 minute, because the 4 hours really not much help right here. Hopping back down the 1 hour. Now, if I were to take sells, I'm looking for a move below here with a take profit of this zone right here, this 250 zone. So that's what I'm looking. So that's good for the hourly chart. Now let me hop down to the 30 minute, and this is 5:30. So move it back one more bar. So this is 6 o'clock where I'm looking at the charts, and I'm prepared if we can get a move down and break these lows here, because the reason I was saying break those lows is because I don't want it to do what it did here, reject it, come back in the zone and consolidate. So I'd want to see it break these lows and continue down to this zone. However, if it does close below this zone, but not break these lows, I'm still willing to take that sell because it's still closed below the zone, something that you couldn't do before. So that's what I'm looking at on the 30-minute, and I'm prepared to either take a sell below here or a buy above this 250 area. And then down the 15-minute is where I take my entry, and I'll show you. And usually when I say take my entry is the 15-minute. It's tough, right? Because it is lower time frame, so it has less weight to it. But I do it because typically, and you got to know your pair. On your pair, the 30-minute will usually go without me, and it won't give me a way to get in. But you got to keep in mind time frame correlation, right? Because if I'm getting in on the 15-minute and it's 6:10, but I wait for 6:15 to close, well, keep in mind that the 30-minute is still open. There's still open volume on the 30-minute, so it could easily reverse and go against you. So I keep that in mind to where if I'm trading at 6:15 or 6:30, I know if I'm trading at 6:30, then there's closed 30-minute volume. So that means the 15 and 30-minute are both closed and we should be good to go. Rather, if I'm trading on the 15-minute, or I'm sorry, that at 6:15, that the 30-minute still has open volume. So be careful and be a little tighter on my trade here. So if I go over one, notice that this 15-minute bar closed bearish below this zone. But keep in mind, that's only 6:15. Or yeah, okay, right. That's only 6:15. So the 30-minute bar is still open. So it could do what this bar did, close below and move right back in. So now at this point, what I'm doing is two things. I'll either drop down the 5-minute to see if I can get a clue there, or I'll wait for the next 15-minute bar to break these lows to take an entry. So I did both, right? I went down the 5-minute because I know my time frame correlation, and I know that 3 5-minute bars equals the next 15-minute bar. So I'm watching it here, right? And I noticed that, okay, now it's breaking these lows. If you go back to the 15-minute, it's breaking these lows. I would have, I'm taking an entry right here, right? And my stop is going to be at the high, the back, pretty much back in this zone. So I would have around a 15 pip stop and a 30 pip move down here. And if you go forward, we're respecting this area and we continue down to hit my take profit or close to it. But then this was new. So that's one thing you got to be careful of. And that's why you got to secure positions. Is this move right here got me about 26 pips. Now, 2 to 1 would have been around there, give or take, maybe another pip or two down. But you got to be careful because there could be unexpected news and stuff like that. So, I'm taking profit with momentum. But that's how I execute. That's how I do top-down analysis. So let's head back onto the PowerPoint. All right. So now another thing I'm looking at when I'm trading, while I'm trading, but also before. Now keep in mind that top-down analysis, I even showed you how I was entering, but I wouldn't be entering it yet because I'm looking at my news first to see if there's any expected news. Now, what I look at first is Forex Factory. That's forexfactory.com. And basically, that is what most traders use to find scheduled news. Now, every day you'll have a set of economic, events that are scheduled ahead of time. So you know that, okay, at 8:30 a.m. this morning, there's going to be unemployment claims. I should be careful. I'm trading around 8:30 a.m. And stuff like that. So I'm always looking at the Forex Factory before I start trading if there's any expected news today. And also, Forex Factory is what I use for any breaking news, any red folder hot headlines right now that are coming out that might affect my trading in my pair today. So let me kind of show you exactly what I mean and what Forex Factory is. This is Forex Factory, and this is what it looked like today. Now there's 3 different color folders. There's yellow, orange, and red. Now this was today, so unfortunately there was all yellow. So let me kind of show you tomorrow. this Wednesday right here is tomorrow. You see there's an orange and a red. Orange is a medium. The event could have some impact, but it might not. Red is, it's a red high impact event. It's most likely going to affect your trading. Now, I'll look at red and orange. I never look at the yellow. I don't care about the yellow because it really never affects your movement. So I'm looking at red and orange, and if there's no red or orange for the day, I'm clear to just trade and do my thing. But I'll definitely keep in mind this section right here, because this is where the breaking news events come out. And if you see something come out like about Brexit or vaccines, you're like, shit, that's why it's moving against me. Let me hop out and reanalyze where I'm at. So this is Forex Factory, and this is what I use during the day as my news filter. Now let me go back to the PowerPoint. Another thing I look at, and I don't just look at that, I also look at news that came out overnight that might affect, that I should probably know. And I use 4 different news sources. I use Daily FX, Bloomberg Markets, Reuters, and Zero Hedge. Now, these 3 you can also use for stocks, with the exception of Daily FX, which is mainly just Forex, right? So let me show you exactly what I look at for these. Cool. So this is my Google Chrome tab for my news sources. Now, every morning before I start trading, I'll go through each of these news sources. I'll refresh my page and just look at the headlines. And if there's a headline that really sticks out, and I'll click on it and read more in detail about it. And reading all this stuff, there's really nothing that sticks out to me. So then that's Daily FX. Then I'll move to Bloomberg, refresh my page. Bloomberg is where I usually see the top headlines, and this also has commodities and stocks and stuff like that. Then I'll look at stocks climb toward record amid stimulus talks. I know that, okay, there's stimulus talks that might affect the movement a little bit. Let me read into that. Then I'll move to Reuters, and then I'll move to Zero Hedge, and that's then I'll just note out all the headlines that came out overnight, what to look for, and that will just help me with my fundamental analysis heading into the day if I expect any news movement or anything like that. So that's how I do the news. Now, this is what my day trading setup looks like, and I can share it for you in 1 second. Basically, I have my charts, and now I have a 38-inch monitor, so this is all in one screen. And then I have 2 other side monitors that just have news on it, but I don't use them to day trade. This is the only monitor I use to day trade. I'll have my charts on the left, and then a smaller on the side. I have a smaller Forex Factory where my breaking news and headlines are. And let me share, and I can show you exactly, my screen. It might look a little smushed for you because I have a big monitor, but this is what it looks like. I have my charts right here, and then I have my Forex Factory right over here on the right. So I'm constantly seeing breaking headlines as they come out while I'm trading. Okay, and last but not least, you gotta journal your trades. And what I use to journal my trades is Trixie, and I love this journal. And now if you're trading stocks, I highly recommend TraderView. But if you're trading Forex, this is a really good website that you can use that helps with not only categorize if you have different strategies or different pairs you trade, but it'll help you also not only categorize, but you can do markups. You can journal your emotions during that trade. Talk about where you place your stop and why, and how you execute that trade. Because when you go back and look at it, you'll know exactly what your thought process is and if you need to change anything. So now let me pull that up real quick and show you what that looks like. Share. Now keep in mind, this right here, what I created is a demo one just to show you what it looks like. So basically, you have categories. In this case, I have, gold, US 30, GBP, JPY. If I were to have all one strategy, or you can have, breakouts, consolidation wedge, it's just, you can have different, pin bars, you can have different categories. Then within here, you put your trades. Then you can title it GBP, JPY, breakout buy, Then you can do your chart analysis and your markups. This is where my thing, my resistance was. If you get on the 15-minute, I bought here, stop loss here, sold up here. So you can mark up your chart, how you traded it, and then have a description right here and talk about your emotions, why you did what you did. And then you click create, and it will be placed right there. And then you'll have all your trades carouseled right in this row right here. All right, so that is basically my day, my trading day, my routine, what I do, how I do it. Now I'm going to pass it on over to Nick so he can talk through, what he does during the day, what his setup looks like. And yeah, so take it away, Nick.
Alrighty, I appreciate that. It is my turn, and I get to talk to you. I'm going to talk to you a little bit about my routine, briefly about kind of my setups and what I use, not to influence you like anyone else here, or not to tell you what's better, but just to give you a sense of, what I put on my charts, just so you have a general understanding. I'm not going to go too in depth in, well, I use this hotkey and this trailing stop and such, because I feel like that won't do you justice, because you won't properly understand what it is, the system would be in that case. So let's just start off and start looking. So this is generally what my routine will entail in the morning. I will wake up, I'll get dressed for the day. I always make sure I drink water. It's one of the first things I do because, well, I've talked about this previously. It wakes me up. It jolts me awake. You feel kind of the cold move through your system. It has to be cold water. You kind of really amp up your systems, your muscle tense a little bit, and then you kind of relax and you're like, all right, I'm up, I'm rocking around. I've got 2 dogs. I will take each one for a walk around the neighborhood. That could take anywhere from 20 to 30 minutes. It's just a nice way to get some fresh air. Remember, yes, there is a sun out there. Yes, there is air, fresh air, trees, and things out there. We aren't just sitting in front of our computers all day, every day. So I do that as one of the first things I do before I even sit in front of the computer, because you want that just kind of that first pleasant experience and that first act of walking outside, cold, hot, whatever. Get that if you can. I'll obviously fuel up. Don't want to be preparing on an empty stomach or without coffee, so I'll do my usual thing. Look, I've gone at this point an hour into my morning routine, and I haven't even touched trading, touched a computer, touched even thinking about that. And so eventually, after an hour, hour and a half of whatever I'm doing, I'll sit down and I'll start my trade prep. So that's obviously kind of in general, that's the kind of the system you want to have. Now, sometimes I'll work out in the mornings. If I do work out, sometimes I'll just prefer to do it at the end of the day. I'm more of a night owl than an early bird, but to each their own. But it's really up to you, whatever can get you in that zone. You don't want to exhaust yourself prior to trading, obviously, but if that can help give you that extra mental sharpness, then so be it. I have a Zoom call with Mike and sometimes with Tyler as well. We go over idea generation. We talk about some of our favorite stocks, what our thoughts are. Because it's good if you can have someone to bounce those ideas off of, even if you're just communicating with someone on Twitter or in the comments of their video, or if you're just reaching out on anywhere out there, getting some kind of chat room or forum that you can communicate with other traders just to get other opinions and bounce some ideas off of people. That could always help. Then obviously I do my video for YouTube that we put out in the morning. I get my routine and I start trading. So look, this is nothing revolutionary here. I'm not standing up and waking up in the morning and making a blood offering to the blood god for profits. You don't have to do anything obscene or crazy. You just need a good process, a good routine that kind of checks all those boxes for you and gets you in the right zone before you sit down. So when I do sit down, I do my top-down analysis, and we've talked about this before, so I'm not going to hit you over the head with it. I do news first. My charts aren't even open. I'm going through news. I'm jotting down my, kind of top headlines to keep in mind, so that by the end of it, I kind of look at all of the headlines, and I look at all of the news and all of the things before me without even reading a chart, without even looking at a chart, and I'm kind of generating my bias then. And then I look at the daily levels. Okay, where are we at the daily? Draw the levels on the market, make sure I'm I'm looking good and I know exactly what I'm thinking about. Then I check my bias and I'm like, all right, does this line up with, what I saw in the news and what I remember from yesterday after my, my review at the end of every day. On the daily, I'll use the 20, 50, and 200-day simple moving averages just to see if they're stacked, see if we have any kind of support anywhere, how are we looking, are any of them flattening out? Is the shorter term momentum a lot faster than the longer term right now? Are we going up a lot faster? Some people use EMAs. That's fine too. Whatever your process is, as long as you have a process and it's consistent every day. Then I'll move on in, and I'll zoom on in. And while, yes, I start on the daily, I could move to an hourly for a month out, but, that's not what I'm focusing on. I move to a 5-minute, 5-day, and it's a little bit of a jump there, but this is generally what I do. I move on in then to the 5-minute. Sometimes, if I'm at a really important level, I'll zoom out a little further, maybe to a 30-minute or so for the last 2 weeks. But I just want to know, what is the weekly momentum? Have we been consolidating this week? Are we poised to break out at the beginning of a week, at the end of the week? What's going on? I set the levels there, and then it's when I move into the 1 minute. All right, I look at the 1 minute of the market or of the stock going into the day. All right, well, what are the pre-market levels? I set the pre-market levels. Are we sitting at highs? And then, where are we in relation to pre-market VWAP? I have that volume weighted average price for the pre-market, and I like to use it loosely. If it's a stock or a market that's not doing volume yet, you got to be careful with that, obviously, but I'll use that. And then if everything is kind of stacked in my favor at that point, if it's, the news was bullish, the daily, we're breaking an important level, or we've got a lot of air above us, the 5-minute, the weekly momentum has either been consolidating, curling up, or we're at the highs, or it's been strong. And in the 1 minute, are we at the highs in pre-market? Are we gapping up? If all of that's stacked in my favor, I've got a pretty good directional bias for the market going in. So that's generally what my process is there. What platforms do I use? I don't want to influence you, because I even think that I'm going to be switching some of my platforms next year. By the end of the year, I don't want to do that now. But generally, my setup is I have 4 monitors right now. I used to have 6, and I miss it. But then I started working back home, and I just haven't set that up yet. But I've got 4 monitors in a 2x2 arrangement. I use Thinkorswim for my charts personally. I don't use it for executions or trades. I've talked about this before. I just prefer their charts. I'm very familiar with their charts, and I don't really know of any platform charts that I prefer over this at the moment. They have issues, so, I'm always checking to make sure there's not something I want to switch to. But for what I like to do, they work for me personally. I can do a lot of interesting moving averages on there, my own studies and indicators, and I know how to manipulate them easily and quickly. And for each monitor, I have 2 stocks. That is it. So, like I said, I watch like 5, 6 stocks at once. Now, I will sometimes just switch through those stocks, and I have other charts ready if I need to, but I don't try to watch too much. I used to have maybe 4 or 5 different stocks on a 1 minute on each of my monitors. I used to do that. I don't need that anymore. I realized that was just noisy. I would rarely trade one stock really well, and I'd trade a whole bunch of stocks fine. And I felt that I was a lot more confident in my trades when I entered them with less going on. And so each of those stocks, I have a 1 minute chart and a 5-minute chart for each stock. So, 2 stocks on the monitor, a 1 minute and 5 minute for each. So it's 4 charts total on each monitor, but only 2 stocks. I only use the 1 minute, and mainly for my entries and exits before I enter something. Especially, maybe not necessarily on the open. I don't think the 5 minutes is helpful, in the first 15 minutes of the day, but going into pre-market or going into middle of the day or end of the day, I'll use that 5 minute as a confidence interval, some of that confirmation on how big I can be, what my real risk is, and what the real momentum is. So that's personally what I've been using right now. I always keep SPY in a corner somewhere. I need to know what the market's doing. I need to know, are we tanking? Are we taking off? Is there some kind of news catalyst? Because if there is, that might influence my trade. That might influence my positions, what I'm looking at. So you got to always keep that in mind. Don't just ignore the market, even if you're a day trader. I do have, like I said, another set of charts minimized. So if I'm sitting there at like 9:45, 9:50, 10 o'clock, maybe even just 11 and noon, and I want to go through some of those other stocks. All right, what stocks am I missing? What are people talking about on Twitter? What are some of my scanners pulling up? What's running the most from the open? Let me pull up, because at the morning, I'll pull up a watch list of maybe 10, 20 stocks. But then from there, I need to hone it into 6. So maybe after a little bit of time, I'm pulling up those other 6 to 14 stocks, and I'm just looking through seeing, all right, is anything else, is anything else better? Do I think I would do better trading one of these? Because usually out of those 6 stocks, one of them's either looking nasty, it's choppy, directionless, I don't like it, something like that, or it didn't fit my bias whatsoever. And so sometimes at like 11 o'clock, 10 o'clock, whatever, I'll swap some of those out. That's a little more, not necessarily advanced, but it's not something you need to worry about. But that's something that I have in my system. In terms of executions, I'm probably one of the few day traders out there, not really, but using interactive brokers at the moment. I used to use this fantastic proprietary, when I traded for an in-house firm in New York, in-house platform that they built. It was unbelievable. I don't think I'll ever see a platform as good at day trading at that. And that's when I was really a scalper, and I really honed in on some crazy stuff, like imbalances, IPO trading, and I still do all of that. But when I kicked back over, I was convinced I was going to be a swing trader, so I started on interactive brokers, and then I just haven't switched off yet. They're actually doing okay for me. Their executions have gotten a lot better, and I actually am okay with their platform in terms of what I'm getting from them. Definitely compared to like a Thinkorswim or something, in my opinion. Now, what I will probably do by the end, beginning of next year, is I'm doing like a New Year's thing, and preparing for a new trading year, is I'll probably switch to either Lightspeed or TradeStation. I like both of those personally. I've used both of those and traded off of them, and I think that as a day trader, I'll be very comfortable with them, and they'll kind of get me back into some of those routes. But my profit, my P&L is doing just fine on the setup I have, which is why I'm not in this huge rush to shake things up until this kind of end of year action is done. Just to show you what my charts look like, just so you can visually see it, this is what a typical monitor might look like. That's it. I've got the 2 stocks. I've got the 1 minute, and and on the bottom row, and I've got the 5 minutes on the top, and they're split off SFIX on one side, CRIS on the other, and this is how I'm, kind of at a base. Maybe I'm zooming in at certain points, moving around, changing them briefly as I'm trying to do some other analysis, but this is it. The pink line is the VWAP. It's the volume weighted average price. That blue line for me is a 22 exponential moving average. I only use it in certain cases if I'm really struggling to find a good trailing stop, or if I want to use it as some additional support and resistance on the 1 minute. But that's it. I don't need much else. Like I said, I used to have all these crazy 1 minutes and all of this crazy stuff on all the charts, and it almost became just too much. It just became this noisy mess on all of my monitors. So this is where I'm comfortable right now. And if earnings season, you also need to realize the season you're in terms of how many stocks there are in play. Earnings season comes out, there's all sorts of stuff in play. Maybe I'm shifting some stuff. Maybe I'm adding 1 extra set of stocks, or 2 or something, or I'm changing something. But right now, with the typical plays that are in play that I like and what the market is doing, this is perfect for me. This is all I need. I'm not someone who's out there trading 100 things at once, at least not at the moment. It's just not in my wheelhouse right now. So now, I've kind of given you enough about that. I've talked about my process. I talked about that pretty in depth yesterday, as well as some of the platforms I use and the review processes I do. So if you didn't watch Class 17, if you didn't watch that course where I go over the review process and trade prep, watch that course. It's long. Watch it in segments if you have to. I don't care. But a lot of that came from my soul. A lot of that came directly from me and from other traders here. And so that'll also really give you some further insight into the websites and maybe some filters and what some of the other stuff that we use is. So let's go through now some of my favorite charts lately. And this is kind of tough because, I've been showing a lot of trades over these last couple of courses that I've really liked. And so I don't want to just keep repeating and just keep showing you the same trades over and over again. That wouldn't be any fun. So I tried to show you some different ones. I think a lot of them, if not all of them, are actually earnings based. That wasn't intentional. I was just going through and trying to find some different setups. So let's just kick it on off. And the first one's going to be CRM, Salesforce. They had earnings. I'm pretty sure I've shown this before, but I liked this stock. And this gap is from the earnings. So spoiler alert, this is what the stock did today, or that day rather. I liked it because, look, clear support and resistance lines. Clear, pretty nice levels here. Pretty respectful levels, and I like that we been in a consolidation. You've got this gap that it never filled. The earnings are bad. It breaks down here. This is what I call a broken chart. It's broken. At this point, people are not just going to be blindly buying in here. If they are, they're going to be fools, and they're probably going to get hurt. You have the pre-market levels to work off of, and that is it. That is perfect. And then I kept this line right here just below 220. This is the gap fill line. I just wanted to know that because that, if I'm playing the short side, if I need a target, if I need the next level, that is the next level to watch, is that unfilled gap. So going into the pre-market, what did it look like? This is weakness. This is what weakness looks like. You don't really see any real up move. You don't really see any real up move on volume, without volume. This is just slow, gradual grinding down. This is beautiful. This lines up with my top-down analysis of, we were consolidating. You've got some pretty clean levels. Momentum was briefly on the downside in that week going down, and now this chart's putting us down. This is a bearish setup. The pre-market looks bearish. We're below the pre-market moving average. I'm looking bearish. So, how did I trade this stock? And this was a pure opening momentum play. So just to warn you here. So we're going to work through this together. This is a trade where I actually started working in pre-market, and you can do that. Just be very careful if you're new, and you're going to see why on this trade. I began shorting right around here. My first lot was around 224.55, and I liked it because, look, you had a nice little consolidation here. We're at the pre-market lows. We're getting into like the last 10 minutes of the open here before the open, so I think I'm going to, get a little in my favor. Had this little pop. It's no worries because, I have a smaller enough scale here that, I can add in if I need to, and if it starts popping, I'm not going to worry, and I want to see how it reacts up at these highs and at VWAP. Got a little pop, didn't worry, came back down. As soon as it came back down and started looking good here, I actually added. Now that's okay, because at 928 we got this pop, and if you watched yesterday's course, I talked about opening imbalances, and I talked that at 928 if there's a large buy influx or something along those lines, sometimes you'll get a pop. We got a little pop here at 928. I didn't panic. You don't necessarily have to panic. We're violating. I'm underwater at this point, but what I'm going to do is I'm going to watch this very closely now. If we continue to push higher into the open, I might get out. What my key is going to be is on the open. On the open, are we making any real move up? At that point, I am out. But a lot of times, and you're going to see in another stock, I actually faded this move. A lot of times it's just going to come back. That it shouldn't be up here. If this was imbalance related, if we're up here because of that, this isn't quote unquote natural price action. This is, it went up for a certain reason. That reason's over. I think it's going to come back down. So I didn't panic. This is why you need to breathe and you need to anticipate and prepare yourselves. And so it started dropping. And at this point, it's pure momentum based for me. And this is an example of me scaling in. This is an example of me scaling out. I exited 20% as we kind of started cracking down here. At this point, I'm up 3 points. I'm like, all right, I can take 20% off. We get another point, and it kind of takes a moment and chops around here. So I actually take off another, 20% here, 20% here. We're doing a little bit of a chop here. I was probably a little aggressive here. Now, this line, this is, this just worked out perfectly. This was that gap fill level. This is the gap that I talked about here that I drew on my chart ahead of time, so I was ready, and I had this line just in case that line failed and was violated and we had another trade. So I know what these check marks are in these milestones. So we reach this, and as we're reaching it, I get out early. I exit coming below 219. I left a point on the table until then, so that probably would have still had some if I didn't exit so aggressively here, but I am a momentum-based trader in the mornings. You got to keep that in mind. It's price discovery. I don't care how hard it dropped. I'm being very cautious. I trade defensively right now. We had a little bit of a chop here. So, my thesis here of the gap fill wasn't wrong. It was a good idea. You've got your levels drawn. You had this nice little pre-market level drawn. And so it was pretty solid. And we actually, this was, I'm pretty sure, the low of the day. And I'm pretty sure this is the low of since it had earnings. So it filled that gap. It's since reclaimed VWAP. And if you're one of those guys that likes fading and likes looking for dip buys and value, we hit that gap fill. We crossed over VWAP after trading below for the first 30 minutes. Not a bad thesis to start looking here if you're kind of, if this is something in your wheelhouse, you're intelligent, your levels and such. But, really nice bounce here. My only criticism for myself here is exiting a little aggressively at some cases, got a little spooked. And it's very possible that this pop here on the opening imbalances just put a negative association in my mind. So I kept that in my mind, and that's always going to be in my mind. I put that in my review that, make sure the opening imbalance pop isn't going to influence my trading because it's not related. That's recency bias. What happened recently might not necessarily apply to this situation. Regardless, great trade here. I watched it again. It couldn't quite hold down here, so I didn't end up trading it again. I didn't want to buy this one, but great play. Another one, Workhorse. This one, moving up pretty nicely. This one's been in play from time to time. This one gapped down pretty hard, and so it gapped down here, and this. I wanted to pull this one up specifically because this is a great example of scalping a range. And so if we're in a range bound market, or if you have a range bound stock, how do you trade? You can't trade a breakout. You'll get chopped up. And so trading range bound stuff in the morning and trading off of those fade plays and trading off of key levels actually came in some real handy here because look, I wasn't a huge fan of this because yes, this is a broken chart, but we're just kind of in open air here. We didn't really violate any key support. There's no real key support in here that you can see that's clean, that you think a lot of people would be underwater in. It's just kind of in this just kind of open mess. So what I did was I looked at the pre-market. And I said, okay, we've got a really good level at pre-market here at 2050. We failed it here, we failed it here, we failed it here. A pretty good bounce level at 19. We violated a little bit, but we could never really hang out down here. So this was kind of my 1.5 range that we were trading in after that initial drop and after that initial consolidation down here. So that was what I was watching. Going into this trade, again, I actually started entering pre-market. So we're looking at this, this is right in here, right in this kind of consolidation below VWAP. We just bounced off of the highs here. So a lot of people who are probably buying here in anticipation are underwater, probably out. And at this point, I actually started shorting. I only shorted 50% in here. Below VWAP, stop is going to be, if we start moving back up through VWAP, it's perfectly fine. That's acceptable. I then reshort another 50% right in here as we start rolling over. I start seeing us move towards these lows in here. And I'm like, all right, this could go ahead. And it did. It ended up going prior. This is one of those 928. Oh gosh, we're actually going in my favor. That's really good. So since I was in early, and I had that favorable price action, if this wasn't clean and I didn't have VWAP, there's no reason to be entering here. But I had stuff that I thought gave me an edge. And so I had favorable price action when we dropped. We touched down on the open, touched 19, which is that pre-market low, and started rocketing back up. Now, my covers weren't my favorites. I started covering kind of just through the way back up here, so I didn't make a lot on this short because I wanted to see if we could just flush on the open, and that's fine because I had favorable price action and favorable entries. What the next trade was for me is where I made most of the money. We, eventually come back up, we do this little peak, and we roll back through VWAP, and we return to the bottom here, to this 19, this pre-market low where I've now seen this bounce from several times, and we put in this little almost like tweezer bottom here, not really, but this little double bottom. This is a great double bottom. We talk about this pattern. Patterns like this on the 1 minute, especially in the open, are a little shaky, but I ended up buying in here. I bought all my value in here after seeing us buy on again and bounce against 19 because at this point I'm anticipating, and this is a little advanced trade, but I just want to show you, I'm anticipating pretty much this to happen again, but on a slower basis. My simple stop is if we just simply start rolling back over. I don't put a stop down here. That's foolish. You shouldn't wait for that long. Maybe you could do 50% there, 50% there, whatever your system is. But this is a momentum. I'm anticipating a squeeze. We start pushing up through here. You could have even waited a little bit, as soon as we start breaking these highs here. But since I'm trading a range, that's my thesis here. I'm just thinking I want favorable price entries, and I've done this enough that I kind of was familiar with that. And I was watching price action this whole time, watching level 2, watching time and sales. We eventually rocket through pre-market. I sell some as we come back into this range. You've got to remember your pre-market levels. I sell a little bit more because we spend a minute chopping around and we touch off this $20. And I was a little worried because at that point we have a double bottom here. We also have a double top that was borderline forming. So I'm down to 50%, and I'm okay with that. I am perfectly okay that I didn't catch this huge move all the way up with 100%. I take the rest off as we're approaching the pre-market highs and as we start violating off of these highs and start making new lows on the 1 minute. I exit the rest. Great little range trade here. This could have been on the daily, it could have been on the hourly, whatever, but the thesis and the trade setup and the levels I used are still the same. So, it was just pure momentum into levels in between the pre-market ranges. And look what it did the rest of the day. This is a chop fest in between VWAP, the high, the low, and I could have kept trading off that. I could have maybe shorted against it, got off at V if we failed at VWAP, and just traded back and forth. But knowing that we're in a range and we're an inside day and curtailing my expectations helped me avoid chop. What about DocU? This was a great breakout play on earnings. Nice consolidation here. We actually were borderline breaking out going into earnings. So we've got some pretty bullish price action, got some nice clean levels. We're gapping up here for earnings. So I want to know where my next levels are. Put a nice little level here. I know we're kind of where we're returning back into the range, and I'm watching. And let's look at the DocU pre-market. Nice little dip on the beginning, but we're breaking out. We're pushing up into these highs. This 247.50, which was also the level right here. This previous peak was our lid in pre-market. So this is a nice little level for me to keep an eye on. I know that there's probably a lot of sellers in here. Clearly, there's people who are remembering this level. They're watching this level, so I'm watching. So how did I trade this one? Well, going into the open, a couple minutes before the open, we started breaking again. So I bought 50% again. This is another pre-market entry. It's funny. I didn't realize that I was showing you all these, but bought a little bit in here as we're flagging up above. I'm only half size, so I can start getting out if we start failing from this level again. And at 928 comes out, the imbalance comes out, and again we drop. This is a sharp drop, and I was ready. I was anticipating. I didn't think we'd drop that hard, but I didn't panic. You don't want to be the idiot that just starts smacking out. Now you can, especially if you're a beginner and you're unsure what's happening. Better safe than sorry. But in this case, I did something, and this is a very more advanced situation here. I actually added. So I added another lot in here because I watched the price action. I saw that we kind of stopped in that imbalance, and my stop was now just going to be on the open. If we start moving back down towards these lows, I'll just get out, and it's going to suck. But in this case, I was very confident in this 247 level. We were already breaking out of it. The imbalance sent us back down here. I don't think that that's real. I don't think that's how the stock wanted to trade. And there's a lot of people who are looking for this thing to get, to break out. And there's a lot of stops that still need to be triggered. So I bought a little bit, and the anticipation on this buy was for a fade back. Got the fade back, so I took off 30%. Coming back into this level, I could have held, but that, you got to remember, this kind of thesis here for adding was I just thought I at least wanted to take some back here. Got some back, and then it was a little choppy. So I got the rest out among the chop, not clean momentum. If this stock wanted to go, this is such a decent level here, such a big level. You have no real resistance here, no real clean level. So if this thing wanted to go, it would go. This thing would have been at 260 immediately if this thing had the buying pressure. And so the fact that you see this just mess, it's a good sign to just get out. And this thing ended up coming off and selling off the rest of the day. And so identifying that buying force is just not there, also saved me. Not panicking, being prepared, scaling in, and then scaling out all helped in this case. Let's look at another one. This is JD. This is another earnings play. This is the daily. Nice clean levels here. I'm drawing my levels on the daily. Drawing my levels on the daily. So I know the resistance here. I know this next key support at about 85, and then I know some pretty decent supports down here. So wherever earnings is going to be, I'm ready. Look at the pre-market action. Looks like it was going up prior to earnings. Bad earnings come out. Oh shit, everyone who was buying on this pre-market breakout of this resistance level is now underwater. They panic out, and we come back up and we fail this resistance. This 92.50 was the resistance right here on the daily. It was kind of this peak point, and we came back up in the pre-market and we failed it. Good bearish price action in my eyes. I don't like that we're in a range now at this point. We're kind of just like in this open range, but the short-term momentum for me, in a momentum-based trade was on the downside. You've got a nice little lid on it right here in the pre-market, so this is how I traded. And the fact that this stock was in a range, I didn't touch this one pre-market. I didn't have any levels I really liked. And we're kind of in this open air, so people could have just bought it and tried to bring it back up to here. So I waited on this one because I didn't feel my edge was high enough. And you got a little flush, so I did miss a momentum flush on the open, but it came back up, failed here kind of at this pre-market level here, couldn't reach VWAP, so I actually started shorting in here. I was very stupid. It broke 89 for a moment and I got out. I wrote down on my notes, you panicked. You saw like a single print up there on a wick, and you panicked. Be smarter. Maybe I was too big, but this is a good thing. Is I was smart. I took a breath and I realized like this was a shakeout. We still haven't violated any highs here. We haven't made any newer highs, and so I reshort in here as we're just kind of consolidating. We start rolling over. I cover some in this little chop in here. I cover more every whole number just because again. I'm a little more aggressive here. Maybe this was a fault, but we're in open air, so this is a little more momentum based. I don't have any levels, and it eventually makes its way down. I kept a nice core 50%, covered it at 85.11 and like 85.22 as we came down into this support. And the support I was looking at is this right here, where I had drawn on my daily prior to trading and prior to the open. And so it ended up coming down to that pretty perfectly. It was a good target, good failure from VWAP, from the pre-market levels, good failure from the opening print, nice flag below the opening print. I honestly probably could have added in here. Couldn't even reach VWAP, got down to this level, and for the rest of the day, it just kind of chopped along this level and grinded along this level. So really glad I put I put my stop there. I'm going to end it here. I just wanted to show you a little bit more, give you that little extra insight from me, a couple more trades from me, get you an idea of what my routine is and see that it's really not that much different than what yours probably is. And, my platforms and my charts really aren't that fancy. I don't need all these bells and whistles. It's not in my repertoire. It's not what interests me. I believe tomorrow's class is I think tomorrow's class is going to be on maybe some more price action stuff. Reading price action, trying to understand stuff. It should be interesting. Look, we've only got 2 more classes now at this point. This is class number 18. So we all really appreciate people tuning in. Hopefully this was helpful and informative. We tried to do it a little differently this time, trying to give you the opinion of every different trader. So I'm not going to sit here and hit your heads with more stuff. I'm sure you've gotten enough out of all of us, and I don't want this to go too much longer. So we will see you all tomorrow again at 7 p.m. Eastern for class number 19. We are always here on YouTube. Drop a comment if you have any questions. I will see you tomorrow, and as always, safe trading.